Honestly, well, no, I always tell you the truth, but this time I'm really going to tell you the truth. Honestly, why do people say honestly? Normally I lie, but right now I'm going to tell you the truth. Honestly, the accounting for these different types of organizations used to be different. So voluntary health and welfare organizations used to have different accounting from other not-for-profit or hospitals. And over time, the FASB has simplified the accounting and made it more consistent across all the organizations because there wasn't a good reason why they were all different. But oftentimes, the income statements would be very, very different, and the classifications of restrictions were very different also. And the FASB has now streamlined that and made it all consistent. So the actual difference between a hospital, healthcare provider, voluntary health and welfare organization, and other not-for-profit organizations is actually almost insignificant today as opposed to how it was 10 or 30 years ago when I practiced accounting. Along 28 years ago, wow, was when I left Deloitte. Wow, I feel old. 20, yeah, whatever. So here's examples of other not-for-profit organizations: cemeteries, civic organizations, fraternal organizations. You have not only fraternities and sororities like we have in colleges, but they're also what we call fraternal organizations, like the Knights of Columbus would be an example. Libraries, museums, political parties, and these are all organizations that serve a purpose, but they're not for profit and they don't deliver health care or education or higher education. So elementary and secondary schools fall into this category. Public television, public radio, religious organizations, churches, synagogues, and mosques. The AICPA, the New Jersey Society. It's pretty cool. Country clubs. Believe it or not, country clubs are not-for-profit organizations. I don't know how that is or why, but it is. Also a zoo, believe it or not. So what's the deal with an other not-for-profit organization? There's an they have an AICPA audit guide, their own. They have to use accrual organizations. There's a lot, not when they say a small organizations operate on cash basis and convert to accrual. Basically, a small organization might be one person, and then they have a board because they have to have a board, and pretty much one person does all of the work. And so they don't need a sophisticated accounting system. And just whenever they write a check, they record an expense. Whenever they receive money, they record revenue. Our Beta Alpha Psi chapter is like this. And I keep books on a spreadsheet. Then they would convert it to accrual at year end. And some financial statements of other not-for-profits would basically explain what's going on. And this would be for the members, and it could also be for donors, because they do solicit donations. So the accounting, it says, is similar to the VHW. I really don't know any differences, honestly. In the new accounting under the new ASC 958, I don't know any differences. The accrual method is used. There's a lot of programs. They may do a statement of functional expenses. Most not-for-profit organizations that I see do a statement of functional expenses there. And we have an example of one. This is the Elwood Historical Society. Here's a balance sheet. And there is cash restricted for long-term investment. So there is a donor restriction here. So you can see, they have net assets with and without donor restrictions. A lot of these organizations intentionally don't have donor restrictions. So if a donor says, I want you to use this for this, you say to the donor, don't give me the restriction because it's too much accounting, trust me. So I don't know if that's so legit or not, but to keep things simple, oftentimes they're going to avoid any kind of donor restrictions at all. And here you can see the revenues and program services and support. Here is fundraising. This is kind of not done right because general administrative and fundraising are not program services and support. They should really be a separate category, but that's how they did it anyway. Here's a statement of cash flows. It's, you know, operating, investing, and financing. So that's the chapter. You're actually pretty lucky when you take this right now, because the FASB has simplified this in a lot of ways and streamlined it so that the requirements are much more simple. So that the video for chapter 19, this is really the last video in this course. So I appreciate you watching the videos. I hope you got a lot out of them. And good luck on the rest of the courses, any future courses that you take. If you're graduating now, good luck on your graduation and on your next position. And please stay in touch. Thank you.